Okay, good afternoon, everyone. So today's webinar is about pivot points, how you can maybe use pivot points in your own strategy. Great. Okay, so this is basically the topics that the points that I'll cover on this webinar. So what are pivot points? How are they calculated? How can you use them? Some limitations and recommendations that I'll share. And then you'll just go through the charts, showing some examples and the different assets and Forex, crypto indices, maybe when price is ranging, when price is trending, just to see maybe how can actually use them. And then in the end, just a conclusion. So what are pivot points? So basically, it's a technical analysis indicator, which is used to determine the overall trend of the market over different time frames. Pivot point is a leading indicator. This means that traders can use the levels to help them plan out their trading in advance. So by leading indicator is basically the opposite of the most indicators that you can see, like moving average. Moving average is not a leading indicator; it's a lagging indicator, because usually when it gives information that, for example, on the crossover, that price we have the crossover moving average, maybe price wants to go higher. When that happens, price had already made or moved a certain distance from the lows until that point when you are looking for longs. The same maybe as a stochastic indicator or some others. Usually they are lagging indicators. So price had already made some kind of move until actually it gives you any confirmation or a signal to look for the trade. And in this case, pivot point, because it can work a little bit as support and resistance. It's going to be kind of a leading indicator, because you're going to see where the levels are even before actually price gets there. That's why it's the difference mostly between a leading and a lagging indicator. So how are they calculated? So it's the formula that Andrew just mentioned, that most likely Gavin shared with you on last Thursday. So basically the way it's calculated is you gather the high, low, and close of the previous day, and you just divide it by 3. And that's going to give you this, it's in blue, the pivot point that you have. So instead of just focusing on the high and the low, it's going to put some extra weight on the closing of the candle, like on the close of the day, just to see where price actually is. And then the resistance, the R1 and the S1 is going to be basically 2 times this value that was calculated, and then you kind of subtract the low in order to calculate the resistance, or you can subtract from the highs to calculate the S1. And then if we the R2 and the S2 is basically just the difference between R1 and S2 and R1 and S1, and you just measure from the pivot point level, and you add it above or below. So if I can show you an example of how to get to those levels, we don't really need to know how to draw them, how to calculate. We don't really calculate them every day, but just to have an idea. So this is euro dollar, and this is divided by day. But if you correct the euro dollar on the daily, for example, I did this before. So if you gather this candle, this one, which is kind of last Friday candle, we can see. So you can see that in here, I have high, lows, close, all this information about the candle. So basically, if we count now the form, if you gather the high, it was 1.04381. So it's basically this. So it's going to be 1.04381 plus the low plus the close divided by 3, which is going to give you a value close to 3 something divided by 3, which is going to be 103924666, which is exactly the value that we have, 1039232, like more or less one more decimal number or less, but it's going to be that one. And then for the calculate the R1 and the S1 is again the formula that I just mentioned, which is going to be 2 times that value minus the low. It's going to give you the same. It's going to give you the R1 and then the S1, and then for the R2 and the S2, basically you just know the difference, the space between R1 and S1, which is around 70 pips, and you add 70 pips to the value of the pivot point, and you have R2, and if you do the opposite, you are going to have the value. If you take 70 pips from PP level, you're going to have the S2 level. So basically, this is the calculation. We don't need to calculate it ourselves. This is automatically by the indicator. By the way, on TradingView, you have that indicator, which is this one. So basically, if you come here, indicators, if you search for it, pivot point, I think the one usually that we use is the standard. So if you press on the standard, it's going to appear something like this. On the TradingView, when you have the time frame from 1 to 15 minutes, the values that are calculated are from the daily candle of the previous day. So 1 to 15 minutes is based on the previous day candle. Yeah, I think if you go above the 15 minutes, which is going to be like from 30 minutes maybe to 4 hours, it's going the value is no longer calculated just based on the previous day. It's going to be calculated based on the previous week. You can see that the blue line is longer. It's basically from the 8th of in here, 9 of May until the 12th, 13, sorry. So just be aware when you change the time frames. So 1 to 15 minutes on TradingView is going to be calculated based on the daily. So you can use it like for intraday values if you're looking for daily setups. However, if you go to the 13 minutes and above, I think until 4 hours, the calculation is based on the weekly candle and not on the daily. So this is kind of a higher time frame information that you can collect from here. However, I don't know if you guys saw, but I shared the indicator that I used for the MetaTrader, because on the MetaTrader you don't have it. So when you come here, delete this. When you come here on your indicators, we don't have one for pivot points. So I shared one on Slack, just as a reply of the webinar where I shared this link. And in there you can download one for free, which is this one, pivot points all-in-one. And in this one, actually, all the calculations are based on the daily. It doesn't matter if I'm on 30, 1 minute, or 15 minutes. And so all these lines that you can see, basically the vertical line is the opening and then the closing of the day. And then the blue line is the pivot point. This kind of orange is the resistance, and the green one is going to be the S1. You can actually change that if you want from this indicator. You can come here, point, edit, and in here you can change it for calculation period. I have daily, but if you want, you can change it for weekly, hourly, or monthly. Maybe if you want to have a bigger view of the higher time frame, if you just trade on the 4-hour time frame, maybe it's not that useful to do the calculation on the daily. Maybe you can just go for the weekly. You press OK, and now this is based on the weekly. You can see that the space is wider now. Now it starts on the 9th of May, and it finishes on the 13th, by the close of the 13th. So yeah, you can have these differences if you want. It depends on the time frame, or you can use it even as a combination of both. Maybe you can have an idea of where the price is on the bigger time frame, like on the weekly, where these levels are calculated for the weekly, based on the previous week, and you can maybe take some decisions, maybe expecting that price will fulfill some points or react from some levels, and then look for a trend. I'll talk about that in a bit. Let me just change again for my daily. So basically the concept of this is if price is above the pivot point, you should be kind of looking for longs, and if price is below the pivot point, it gives kind of an indication that price is bearish. So another filter that you have with these indicators is that you can select how far back do you want to have these lines being shown. I have, at the moment I only had 10 days, but maybe if I have 20, now I can you can do the same on TradingView. So this filter of how many days back do you want, you have it. So there you go. So you can see that you have this. Let me just remove the previous. Can you guys see my chart? 1 second, just push it. Can you guys see something? Yeah. Can you guys see this, right? Or is it too small? Is it okay? I'll see it's okay. 1 second. Yeah, okay. So yeah, we basically start having this trend now, and maybe, so this starts being a trend. Maybe if you see maybe a low being broken or something like that, and you retest to the, for example, in here it worked, this day, in here basically it worked again, price opens a little bit far below from the pivot point, price retests the pivot point and carry on down. Price again opens below the pivot point, this time didn't really manage to get there. Again, price opens a little bit below the pivot point, it almost gets there, another sell, even if you just consider S1 as target, S1 as target, S1 as target, and so on and so forth. And now in here you can start seeing maybe this is the first time the resistance, the R1 is actually broken to the upside. So maybe we start seeing that price is about to range. Then maybe the move to the downside is about to stop. This was a trend that it lasts almost 1 week. This is 21st of April until the 28th of April. So this is a full week of trades. If you had just tried to sell at the retest of the pivot point with the target at S1, maybe you could have managed to get good entries in there. Maybe you would have missed this one. You would have 1, 2, at least 3 sells in here. And now you can see that price is ranging a little bit, and now it starts ranging. On a ranging scenario, yeah, maybe different approach needs to be taken when price is ranging. You need to come up with another strategy, or maybe it can actually gives it some indication that, okay, I can see that price is ranging because price is breaking several times up and down the pivot points. It breaks here, it comes back, and breaks here because it's moving like this. We have a small impulse here. Price retested. But yeah, maybe if you can use as well some other information. That's why it's a little bit tricky just to take a look at how to make decisions on pivot points. Maybe if you actually add some RSI to see if the price is overbought or not, or if you actually add proper support resistance levels that maybe you have drawn on yourself by your own, and you can see some confluence in between these ones. As soon as price again is about to carry on the move to the downside, we can see that again pivot point is respected and price goes all the way back. Even this day, if you had actually tried to look for a selling here, at least the retest of the lows, it would be a great zone to look for. And this is what I said before, between 1 and 15 minutes. And yes, in a range market, the distance between pivot points are smaller. In a trend, you see that the distance between pivot points in SR are bigger. That's what I just mentioned. So yeah, how can we use pivot points? So basically, it can help a little bit to determine the overall trend in the market, or if price is ranging. Usually, if price is above pivot point, it gives a bullish indication. If traders should be looking for longs, maybe with R1 or R2 could be used as the targets. And the opposite, if price is below the pivot point, it can give a bearish indication with where the trader should be looking for sales, with S1 and S2 could be used as a target for the sellers. So basically R1 and R2 or S1 and S2 could be used kind of a support and resistance as well. And yes, you should try to, or a good way to do it, it could be maybe try to implement it with the combination with other indicators, or even another just basic support resistance or even trend lines to see if there is any confluence with it. In terms of limitations, okay, pivot points are basically just a simple calculation. Like there's nothing aside from this math level, from this calculation, there's not a really assurance that price is going to stop in there. It's a little bit different if you can actually see a support or resistance that you are used to draw, because in that aspect we actually can see price respecting the level a few times, so it gives a little bit more importance for the future. In this case, it's just a pure math, and there's not that confirmation of seeing actually price testing a few times just to give it more importance. Yeah, for my recommendation could be to compare those levels with another indicators or support or resistance. And this is the point that I would like to touch on, which is if you actually are about to use this, try to go back, find enough sample size, a size where you can collect some data to see how many times this price actually touches either the R1 or S1, how many times actually price touches the pivot point. Maybe try to see the difference between when price is actually in a range market or in a bull market, or in a trend market, if when these situations happen, and try to collect that information in order to then give you more confidence of how to use this pivot point, because it's going to help you. So yeah, just go back to the charts just to see. So basically, this is the base way to take a look at pivot points. And now we're just going to go through some charts. And if you guys see any kind of pattern as well that maybe it would be a good idea that you want to share, just share with me. For example, today we may had a good opportunity to go long on euro, just by when price retested this trend line, this pivot point with the target at R1, and that's it. That could have been a good trade in here. Maybe after price, we see that price open a little bit above it. After retest it, we see that price hold it. Price managed to hold this price, this zone, and then maybe after the break of this, or maybe we have kind of a moving average somewhere in here, or some kind of RSI indicator to give us maybe the indication that to try to look for the ones with the target at R1, and that could have been the trade, and that's it. This could have been one of the ways to trade. You can see that price actually rejects this low as well. Maybe you can give some information that price actually is about to reverse to the upside instead of carry on, move to the downside. So yeah, this was euro. So you can see a few examples of maybe use it as a trend line, or maybe as a possible reversal as well in here on the second day of a reversal, by using the PP. Yeah. For example, if maybe price hasn't touched this level in here, but price opens and goes all the way up, touches and rejects the R1. If you have the information that 90% of the days actually price crosses the PP level, maybe you can try to look for sales at this kind of resistance level, expecting that price eventually is going to cross, or to at least come close to touch the PP line. Another situation that you can use as well, I think this one was on, let me just call it pound dollar. I think pound dollar had that example. No, pound dollar was just as well, like pound dollar was actually pound dollar is kind of the example that I just mentioned, which was kind of price opening here. Price went up. He hasn't touched yet the pivot point line level. It touches first the R1, and then and then goes all the way down, and now it reacts from here. So if you could have kind of looked for sales under a test of the R1. If price said hold this level, you could maybe look for the sell, expecting that price eventually is going to cross, or is going to touch this PPP. Maybe if you use any indicator, you'll see that this is overbought. Overbought, and price maybe it's about to turn. Or if you actually draw another important level of support resistance, you can see that price is basically now retesting all these walls in here. So maybe that was a good zone as a confirmation or a confluence to then for a sell. Yeah. Another way is actually price overextends until the R2. Maybe if price actually overextends to this level, you may see it on the Bollinger Bands that price is for a second outside the range, and then maybe closes somewhere in here, and then maybe that could be the clue to look for shorts somewhere in here. That could be ways to look for combinations of between indicators and so on. Yeah, so this was an example on pound. Again, you could maybe look for, maybe you could have actually looked for longs as well, because price now rejected quite well this level. So maybe there was opportunity to go look for longs. Yeah, it depends. I think it was this one. Just take a look at dollar yen. Yeah, dollar yen, I think it was, this is a little bit messy. Actually, me personally, if I was about to use this, first of all, I wouldn't use it for so many days behind, for so many ways back, because I like to actually use or to have my charts a little bit cleaner. So maybe I would use maximum five days. Maybe you can even use as a combination. Maybe you could have the weekly level. Maybe you can download 2 times this indicator. You could use to have the weekly levels marked on the chart, and then just the most recent day, and you could play around with it. So you would have the weekly level and then just the daily, and you could be playing around to see where price is and if there is a good zone for price to go for the weekly level. Just insert this later. For example, if you take a look at this eye with RSI, so basically we can see that we kind of have this hidden divergence. Price basically just broke this high, but it's super extended. We have this level in here. From this size over there, you can see the complete divergence in these 2 levels. You can see that maybe price is overextended because it just kind of reacted from the R2 of the day, and it actually then and it reversed from there. Like it rejected the level, it went down, and then maybe in here, maybe there was some kind of moving average that could give us the indication as well, some crossover to maybe try to look for sales in here under retest of the PP level. In this case, actually, price had opened at the PP. So yeah, I'm just giving ideas of maybe how you can use this pivot point level. Yeah, in terms of pivot points is maybe to if you can see it, if you can, I will be looking maybe for this maybe R2 or S2. Maybe that there's going to be some confluence with these reversals around the Bollinger Band, and that could be an option. Or if you have such a big level, maybe you can even use straight away just the R1 as well. Yeah, that could be an option in terms of looking for reversals. In terms of looking for the continuations, maybe just like I showed before, maybe it could be instead of a good level, could be just try to join the trend at the pivot point level instead of actually even expecting price to go there. For example, in this case, we have kind of this move already, and as soon as you have maybe the second break of the low, when price comes here, it's maybe a good zone to look for the sell, and maybe you have this confluence as well of the Bollinger Band, the other edge of the Bollinger Band, giving indication that maybe price is now ready to carry on. This can be a way to use it. So yeah, this chart now in here is a little bit messy. Let's take a look at another one.
Pedro,
yes.
Can we try maybe to use it at market open, certain assets, like when it's very high volatility? Sometimes when, let's say, market is opening, exchange, pricing is like bouncing very wild. Maybe we could try to use it then.
Yeah, you can see, like, for example, even in here, right? Like price open somewhere in here, or however, this is kind of 1 a.m. So this is still Asian market. Maybe it's going to be hard for us to trade, but if we take a look maybe at some
US,
or even when the market is opening, but price is maybe about to react from this level during the London Open. Could be another scenario. Where is this one? For example, on euro dollar, I think today it was. What time is this? It's still 4 or something like that. But then the real momentum begins actually during the London Open. around 8 a.m. That's actually then when the final bounce happens. So maybe if you still see price bouncing around this level when the London up is about to open, is about to occur, maybe that can be the trigger, or can use this as a zone as well, as an extra confirmation to maybe look for a long. This one was the retest in there. For example, in here, what time was this one? 5 a.m. But then again, it's around this time. Then price actually gets the final momentum, which is around 7, 8 a.m. And then price finally goes to the downside from this time. So it spends a little bit of time there during the Asian session. Price opens here, spends Asian session around this level, and then there can be some trigger around the London Open for price then to carry on the momentum for the day. This can be something to be used for. Yeah, definitely around the opening of the sessions can be something to be used for sure. Yeah, let's take a look at another pairs. Let's take a look at, can be gold. Let's just see how gold will be behaving here. Can you see gold was trending as well, like from like 1 month ago, from the 14th of April, and there you go. You can see that price goes down, it respects, goes down, it respects again this level. You can go down again. In this case, it's already a little bit shorter, but price still goes, it kind of respects the level, goes, opens. Like you can see that there's a trend, and price should just carry on going on the same direction, and maybe until we actually see the R1 being broken to the upside, maybe that's still a confirmation that price is trending to the downside. So maybe until the moment that we see some R being broken, which is, this was the first moment that we actually saw price breaking one of the R's. Maybe in that moment we pause for a second, and instead of looking for sales, or even the opposite, because then we can see that price is bouncing around this level of R2 with the extreme of this Bollinger Band, and maybe can actually rejoin the move to the downside. And I'll still I'll try to see some confluence with levels of support resistance. Just try to see, because maybe that's where you can find some good zones to look for reversals as well. So again, it depends if you are looking for trend continuation. And if you are just waiting for that, okay, then wait 1 second. Where was I? I think I was here. Yeah, price breaks it. Price breaks again. In this case, price never really touched it. Price never really touched that level. Price breaks down again. And yeah, in this case, maybe you would have just had a small win, or even then a loss, because price reversed to the upside. So yeah, you can, or even go try to look for longs in there. So you can see maybe some ways of how to use it. This is like this. This one is creating a higher high in there, and then creates already a lower low. So there's a small level of divergence in there compared with this one. And yeah, and try to see the opening. Try to look for the opening as well. This can be a good trigger. Maybe another filter as well. If price goes all the way down, without retesting the pivot point level, and instead it already touches the S1, maybe stay away from this sell. Maybe that can be a trigger as well. Instead of looking for sales, even though we are kind of in a downtrend, if price actually goes all the way down, it touches this level first, don't look for sales again in here. Be careful, just wait for another opportunity. For example, if you take a look at the previous scenarios, because for example in here, price open, price didn't touch the price never touched the S1. It actually comes all the way back to touch the pivot point. And now, yes, look for sales. In this case, price opening here, price never touched it. It stayed a little bit away. Price came here to the pivot point and maybe look for sale. Maybe that can be a filter. Be careful which level is touched first. Is it the S1 or is it the pivot point? Maybe that can work like that. So you need to start like as you go through the charts. It doesn't matter if it is for pivot point, if it is for Bollinger Band, if it is for RSIs or whatever indicator you want to trade for, or even just normal support and resistance. Just go around and try to see some patterns, some ways to use it. Even if it doesn't, even if you are not using it as a way to execute or looking for entries, maybe you can use it as a filter to not look for trades anymore in that pair. Both ways, it's a benefit for a strategy because maybe you are avoiding to go long in a losing trade, in a losing setup. So both ways work when you are looking to develop a strategy using this kind of indicators or any pattern that you look for. Another one to price goes. It's ranging a little bit. For example, in this level, price open in here, price left is zone fresh, the pivot point, price goes up. Maybe someone will be looking for sales already in here, maybe they would have a loss, but then again, price completely rejects. If you wait for this level, for the R2, price rejects this R2 and then goes all the way back and it retests now the pivot point. So yeah. So if this pivot point is still fresh, maybe try to look for a sell if you are looking for reversals, or if you see that price is ranging, and if pivot point is still fresh, price goes over kind of overbought in this scenario, you can maybe try to look for the reversal. In this case, we actually had this divergence in here. So yeah, if you manage to get an entry in here, that this could be a good sell. Yeah, just play around with it. Just go around, try to see any confluence. In this case, price actually was retesting this size in here. So yeah, so this was gold. This was maybe a way to do it. Even today, if you just try to sell, you have your target in here and that's it. That will be for it on gold today. And you would have your trade, then price reversed, but you'll be happy because you would have managed to get your winning trade in here. Yeah. Let's take a look at another pair. Let's see how does it work on Bitcoin. Are you guys getting any ideas of maybe how to use this, or just do it this? Bitcoin, let's see on 1 hour time frame. If this also works on Bitcoin.
Pedro, can you look at this chart and say, let's say you open your laptop in the morning, you started the day, and you see a chart like this. How do you interpret the latest movement then?
First of all, I would freak out with so many things on my chart, so I'll delete everything I have and I'll just looking at price action. If I would look at the
I'd freak out as well. That's a lot.
If I would look at the Bollinger Bands, because that's what not Bollinger Bands. If you would look at pivot points, which is what we are talking about today. Yeah, price open here. Price was kind of maybe close to the R1, and seeing this being rejected, maybe that's what I would try to see. I'll maybe try to look for shorts because price actually is retesting this level in here, this previous level, which is great to look for shorts because it's actually, if you actually go to the 4 hour time frame, it's the previous level of support resistance, so it's an important level, and that maybe would be a trigger to look for sales. Do we have any kind of divergence in here? No, we don't have yet. But yeah, today I'll be looking for sales in Bitcoin. We have this. 1 second. We have these highs to be faked out, which is happened. Then we have this level, which is still fresh. So yeah, I'll be looking for sales. We have maybe this trend line in here. As soon as I see this trend line, if you want to see the confirmation, maybe you can look for sales as soon as this price in here. Let me just select another color. Yeah, this one in here. Yeah, as soon as we have this trend line being broken, maybe try to look for sales. This could be the trigger to look for sales. Maybe first target, maybe last target somewhere. I don't know, at least this wall, maybe somewhere in here. But yeah, by using pivot points. What can I say in this? Yeah, maybe look for price, because price isn't yet, again, price hasn't touched yet this pivot point. So maybe try to look for a sell. In this case, price never really got close to this R1, so maybe we'll just miss to sell. Or after price breaks the pivot point, after rejecting this, okay, this can be another strategy, which is after we see price rejecting this R1, price goes down, price then breaks this pivot point, and you can use it kind of a breakout strategy where price then retests this pivot point. You can even look for the target at S1, just stop loss underneath this level because it's a good level. Maybe it's already some structure to look for stop loss in there, and you actually have this trade, and that's it. Maybe this could have been the trade, and just short this trend, this retest of the PP, and look for the sell. This can actually be another way to do it. Kind of at the opening of the day, we see R1 being rejected, then price needs to make a decision around the PP level. It either respects it and carry on to the upside, or maybe you can see that price breaks it, and there's maybe this signal in here, and you have this continuation. In this case, as you can see, it also respects this middle moving average of the Bollinger Band, this middle level. So can be again the trigger to continue to at least expect. As you can see, you have kind of a confluence between Bollinger Band and the PP level, and you can look for the sell in here with your target. Can be the S1, or you can even be more aggressive, the S2, or you can just look for maybe some lows on the left side and to see where it is. So this can be another way, another strategy that you can implement with pivot points. If you miss the short in here at the beginning, at the top, this could be a way to rejoin, to move to the upside. Yes. No one spoke. Yep. Okay. I thought you were about to say something. Okay, maybe not. Yeah, this could be another way. So yeah, I don't even remember now. Go ahead.
If price does not come up and retest R1, would the pivot points indicator be? You mentioned that price doesn't always respect the pivot points. So in this example, price has not come back up and retested R1. Would you expect price to come back and retest R1 or no?
Yeah, that's a good like, for example, in here, yeah, you can see in this example, price is just breaking up and down the pivot point. In this case, for me, we always need to be aware of where price may be, right? And like to see the bigger picture and the story that price is telling us. Okay, I can see that price is just rejecting this high. It reacted really nice from there. I can see that there's already liquidity above around this level, and this is around the. Oh, this is actually the one. Oh, this is perfect actually. Okay, this is around the one that open. So this could actually be a good trigger to look for sale. Maybe because price has already spent so much time in there. it's hard for me to say. Maybe sometimes price actually maybe it's just going to bounce from here and maybe go there again. It maybe because we are close to the highs. Maybe I wouldn't be actually looking for longs because we're already so close to the highs. So I wouldn't be interested in looking for longs, and I'll be biased more for looking for shorts instead. So that could be maybe my game plan as soon as I see this bouncing from here. If you go maybe into even lower time frame, maybe you can see something else happening in here.
If you try to play the retest, right? So that first leg down, and then there's a little retest. Yep, right there, right? So, how would you play that? Because you were looking at the 5-minute chart, right? So you're looking at the 5-minute chart.
Yes.
Yeah. And you see that price is coming back up to try and get that retest. If you miss it on the 5-minute, is there a way you can maybe catch it on the 1-minute or maybe a 3-minute or like a tick chart or something? If you see price coming up and you're like, oh man, I missed the first entry on the 5-minute, is there a way you can maybe catch the second bounce or the second retest?
Yeah, 1 second. Let me just do it this. And just do it all this.
I can just filter with RSI. See if the retest is going to be has some potential to really retest.
How did you
so
do
with
that?
RSI, you would just look at if it's continued to be over, I guess in this case, overbought.
Oversold, divergence.
So how do you play this well in here based on what you have in here?
I'm not sure. I don't really use RSI, to be honest.
Yeah, no, I mean, Ari, how do you play around with this? Would you try to look for the 7 here or not? Based on this RSI. But do you want me to add again the Bollinger Band just to? I cannot again.
Well, the RSI as it failed to. This is the middle level in the RSI. It failed to breach through the middle level.
This one, yeah.
Yeah, the positive and negative, basically, bullish and bearish.
It's like a rejection, yeah.
Yeah,
and it was somewhere in there.
Just before you get the candle signal.
So you would have not taken the trade because RSI did not break that middle boundary.
I would take the short, probably.
Yeah, it's the opposite.
You would take it, sorry.
Yeah, because price kind of I cannot draw there. But 1 second, I'll draw with this one. Because price actually, if price had done this, maybe it wouldn't. But because actually price maybe broke it, maybe it would. Am I right? Or because we have this?
Yeah.
Well, but okay, in this case, yeah, you see that price is coming down and RSI is moving downwards as well. At that point, I feel like it's too late, is it not? Because you already see that price and RSI are moving down.
Well, I would generally not trade this because the bullish bands are not wide, so liquidity, it's not much liquidity or volatility in the market. So the market usually does not have much space to move. Probably need to wait till some open. It's probably an open right afterwards, no? US or the London Open?
This was the almost the one that this is 9 a.m. UK time, around that time.
Just
9
before.
a.m. Not 9 a.m. Sorry, this is 7 a.m. UK time. 8:45, 9. Yeah, it is around 7 a.m. UK time in here. And then we have all this moved on. And then actually London Open, actually we have the move up. And then US Open, we basically have not moved on. This is what has been happening in here. In terms of your question, in terms of looking for, let me do this again. So let's go to 1 minute. You can be aggressive with the tick charts if you want. Maybe that's not really necessary. So this was the story that I was saying before. We have this double top in here, liquidity. We have this level. This is kind of one of the highs that price can react from, and that's exactly what we have, right? So price came all the way up in here, respectively a bit, and now price kind of reverse. And ways to do it, you can actually draw this trend line. It can give you the trigger as soon as you have this one broken, and this can be kind of your first looking for sale. Maybe if you wait for that, if you look for the horizontal level to be broken, maybe in here we still don't have the strategy, or you can have just maybe place a stop order, a sell stop in here, or actually in here could be a nice trigger because we just broke this trend line. Then we have this accumulation of candles in here. Basically, we have this small range inside here, and you can actually place a sell stop in here. As soon as this value is broken, you are short. Or you can wait, and this value is broken, place, instead of being short straight away, just wait for the retrace, and you are short. So this could be the two levels, two opportunities to look for short inside here, with some confirmation, right? Without expecting actually to go short straight away in there. So this could be one of them. Then price goes down. And what we have in here now, price actually breaks this low and breaks this low with this one. And now we have this new supply, which is this one in here. This supply is also aligned with this previous high. Let me just actually change the color of this. So it kind of has some kind of structure around this level, which is actually aligned with this PPP. So it's not in this case. What happened? Jesus. Hopefully it's going to open. Come on. Maybe I need to close this again. Okay, I'll close it and I'll open again. 1 second, guys. Close program. It's opening. Come on. Come on, man. Where were we? Bitcoin. Just remove this again. And you are on 1 minute. Okay, so I mentioned this part in here. Yeah, that this could have been a trigger to go down. And now, if you actually are looking for a possible continuation to the downside as a breakout, it's actually nice to see if price actually is aligned with some previous level of support resistance. In this case, we had this important line. And now price breaks it, the PP level, which is this blue line in here. And now we have this next level of supply. You can even mark from the high. You can even use it either this one, which is almost touched to the pip in here, right? Use this low. This is how I would do it. Come on, man. And let me do it this RSI as well. Okay, so this I will draw this supply level. I would use at least this low until the high, and I would use it. And as you can see, price respected this low. Actually broke this low here on the side. Kind of okay. Price most likely wants to carry on to go to the downside, and then price retraces. And again, if you want to use, let me just do it this now. Open this one. You can use again another trend line. It looks like a good confirmations when looking for maybe entries, because you have this touch, this one gets closer in here. And now you can again look for the break or even break of this low, which happens somewhere in there, and you can join to move in here. And this is maybe around the moment that you had that rejection on the RSI, that price maybe is going back into that 50 level line, is going back to the downside. Doesn't really does this, it does the opposite and goes down. We have the breaking here, and this can be again, you can open again another sell stop, and you can join the move to the downside. Price goes. If price doesn't break it, basically you can try to join again after the rejection of this low. Price initially respects this level, and you can again join another short level, another sell stop in here, and you can maybe join again in here. But this can this start as you start opening shorts, as price starts moving too much to the downside, eventually price may just retraces, and eventually if you carry on opening short to further down, maybe that's not going to be already the best zones to look for it. Be always aware of where your target may be, and to make sure that you have space. For example, if you actually just base our decision, and if you consider that our space, it will be the next S1, this could be the target, and that's it. From here to here, this has been the target. From here to here, this could have been the target, but find a way to find a zone to place your stop. It could have maybe be above this high in here, and because this price goes up, goes down, most likely it will respect this high. If it rejects this high, most likely it's going to go higher. So maybe your stop loss doesn't need to be actually above this high. This is a good zone, and price can just go down and refill this space. This is just basing on targets based on these pivot points that we just talked about today. This could be a way. So you could have had short in here, went to opportunities to go short, and then in here, and yeah, this could be you want two ways to enter. You either wait for the tests, or if you want to actually wait for proper confirmation, you can just place a sell stop. As soon as price breaks it, you are short, and you try to join after a confirmation of this. In this case, this trend line could have been broken, or instead a proper support level that has been broken, and then it can be the trend line or a support zone as a confirmation. Of course, it matters where this high actually is reacting from on the left side, and how the story behind it. Yeah, that could have been a way to do it. In this case, for example, it could have maybe be to the opposite side. Break. As soon as you see this high being taken, maybe you could have tried to join to the upside. But yeah, this could be ways to try to enter. This is for 1 minute chart. This is aggressive. You can try to find ways to keep joining the move if you want to. Do you get any more questions, Matthew, about this way to try to join, or to look for ways to participate in this move to the downside? Yeah, in this case, go ahead.
No, I'm just
try to see the break of maybe a trend line, see how price behaves around here, and as soon as you have actually maybe indication that price wants to resume this, maybe after retesting this trend line, just try to make sure that you are in the trade, somewhere in here. Don't really wait for price to go too far away from kind of your initial zone that you're looking for shorts, because maybe then you're already entering too late. And let's pretend that price didn't want to break this previous level of resistance. Price actually wants to do this. If you enter here, you still have a good, at least kind of 1-to-1, 1.5 to 1 to 1.5 risk reward. If you start looking for entries maybe too late, there's not enough space for your most conservative targets. So yeah, and in this case, actually, it could be this level of PP or this level of support resistance.
If you, I'm looking at NAS right now. I always look at NAS, but if you look right now, it's kind of creating new lows after touching the pivot point. I'm looking at the 5-minute right now. So after touching the pivot point 3 times, it's creating a new low.
1 second. Yeah, this. I want to do all my analysis with pivot points today. 1 second. Actually, let me get this training view platform.
Yeah, I'm on Trading View right now.
So on Trading View, as I mentioned before, if you are kind of 1 hour or 30 minutes, you're going to see this as a weekly. The calculation is going to be on a weekly candle. If you go down to 15 minutes, it's going to be more of a intraday zone. So you're on NASDAQ.
Yeah, NASDAQ. And I'm looking at the 30-minute chart as well. And the pivot point, we're right at that pivot point.
Yeah, I've been bouncing around this level.
Yeah. So, I mean, since the overall trend obviously has been down, and we are at that pivot point that we've touched 3 times, but broken a new low, made a new low on the current pivot point. How would you read that? Would you? I'm reading it as we kind of come back up halfway up that move. Let's see. Oh, you're looking at 30-minute. Okay, let me look at 30-minute as well.
So they rejected this size again, right? It still keeps rejecting the size at 12,324.
Yeah, exactly. So I keep forgetting. You look at NAS 100, not NQ, not the futures.
I heard that one before.
So you see how it created that new low. Is this a scenario where you would use a Fibonacci off of the last 30-minute candle? So kind of look at the 50% of that last 30-minute candle and make a kind of an assumption. I don't know if you can call it an assumption that it will.
Are you looking for shorts or buys in this scenario?
Shorts. I'm looking for shorts.
You mean this, like create the fib from this high to here?
Yeah, from the last 30-minute.
Okay, 30 minutes is this one.
5-minute as well.
Sorry.
So the last move, the last leg down, yeah, on 5-minute. Yep. So the last leg down. Would you take the 50% of that, and since it did create a new low off of the pivot point, would you take 50% of that last swing low and kind of set a short order there, a sell order? Does that make sense?
Yeah, it could. Like me personally, I don't like anything that I see in here.
Okay.
I do like this. I like extremes.
I think it's gonna test 12,370 potential and then move back down.
12.37. Where is 37?
If you zoom out, it's a bigger downtrend line from the Fed meeting.
And too many things on my chart. 1 second, let me delete something. This is down.
370.
This one?
From the Fed meeting? No, there's a
Cool.
smaller trend line.
If I draw,
Yeah, it touches already twice.
so 1 second, it's just
Yeah, if you look at 370
Jesus.
on the 5-minute, it lines up with the R1 and R2, previous R1 and R2.
From where do you want this? Is
Yeah.
this the Fed? Yeah, from here to
Just draw a trend line.
like this.
This makes sense.
This is
This-
just basically touching the today's high, right? Just
The
basically this
highs,
trend line.
liquidity zone, the top of Bollinger Bands, a lot of things combined together.
And you are looking for something like this to go down.
Yeah.
Yep.
Yeah, that can be like my trigger for now. Is I've been mentioning this size for quite a while until actually I want to see this size being taken. I wanted to see this size being taken even when they were here. If I was expecting any move to the upside, that never happened. Price went down now. Price now is respecting. So kind of this price that I'll be looking at, it is in between this level until price actually now breaks one of these two levels. The break of this low, actually, it's kind of important, but we have a demand straight away just underneath it. So let's see what's going to happen. This move that you are saying, it kind of maybe have happened already. I don't know if this high already took the orders from the supply. So kind of this would be nice. What you are saying, I don't want to move the trend line in there. This could be nice. It will be aligned as well with another supply level in here and maybe the retest of that. However, price already went down and already went there, took the orders, and now it's moving down again. So this is a little bit weaker in terms of orders that are left behind there. So we'll see. I would rather this move had never happened. Price actually went down from here to something, and then yes, and then I'll be much happier if this had happened instead of this price had already taken these orders in there. If I was looking for shorts now, but yeah, possibility this can be a zone where price can react from, or even in here, and eventually if price breaks these lows, yeah, the next level and the lows, we'll see. Yeah, we'll see. I'm expecting kind of this decision to either the break of this high or the resume to the downside to be done tomorrow, on Tuesday, not today on a Monday. That's what I'm expecting to see. Tomorrow, I think it's going to be a good day to see price gaining some momentum either to the upside or to the downside. I think it's going to happen tomorrow on the Tuesday. But yeah, at the moment, maybe if you see a 50% level in there, I don't really like. For me, price is already in the middle. Yeah, maybe I'll wait for price to get a little bit closer to the highs again to maybe try to look for shorts. We just broke this. It's running on with my mouse. We just broke this low, so yeah, maybe price wants to go down, but there are so many lows in here. Actually, this was the first break of the low somewhere in here. So yeah. We'll see. Me personally, I don't really like anything that I can see in here at the moment, so I wouldn't even look for any trading here. But yeah, okay. maybe on 1 minute or 5 minutes, maybe there's some opportunities in there. In terms of pivot points, what kind of information do you have in here? It's become so cloudy, and this is the pivot point of today. Price has been bouncing around far away from this R1 or S1, so none of these levels have been touched today. But 1 second, because this is the weekly level, that's why maybe. If we take a look at the daily level, okay, we are close to the R1, and let's see if price wants to retest this S1 or not. Maybe we'll see. Yeah, we'll see what price will do. Actually, let's just take a look. If we actually take a look at this and look at the weekly levels, what information have we gotten from this? So we are at the pivot point 1. If price wants to retest this S1, we are still inside these lows. That can be an option to then carry on to the upside. Or if you get to this R1 for the weekly level, it's going to be price needs to break those highs, but then we are at this good level of kind of support resistance that was here before. Yeah, we'll see. But this is a way to play around with it as well. Maybe just take a look at weekly level, take a look at maybe what price can do for the week, and target maybe one of those R1 or S1 for possible longer term targets. If you're a swing trader, for example, it's something that maybe you can test and try to see if actually those levels are touched or not on a weekly basis. So it's a lot about gather information. When you want to use some kind of indicator, you need to gather information before even apply for in your own strategy, before implementing it. And it's a accumulation of information, of data. Backtesting a little bit, try to see how price moves around it. Well, how can you use it as a filter, as an entry, as a target, as a place to place your stop loss, to define if price is trending or not, if price is ranging. So it's it's the same for pivot points, the same way for any other indicator that you want to include in your strategy. Yeah,
cool. Thank you.
Yeah, you're welcome. Any other questions, Andrew, that you requested this webinar? Are you satisfied with have you found any maybe possible ways to implement this pivot point on your own strategy or the strategy that you're trying to create? Are you still here, Andrew? I don't know.
I think you left. Yeah, I was just having a look at this this pivot strategy, and it seemed quite interesting. It seems like it's a good guide for sort of mapping out sort of price levels across different sort of time zones. I was just wondering, what do you think the main sort of limitation of pivot points would be if used in a strategy?
I wouldn't maybe use it just on itself. I'll try to find some confluence, maybe try to see if actually it's aligned with the proper support and resistance, that it gives maybe a little bit more of a confluence and strength to those levels. As you mentioned before, this apparently it looks like it's maybe a good filter to define if price is actually trending or not. If you see price just respecting the pivot point and carry on in the direction of the previous days, instead of, for example, prices going down. If you never see actually price even getting anywhere near close the R1 or even breaking the R1, maybe we can define that we are in a bearish trend, or vice versa as a bullish trend. So yeah, for me, I'll try to use it as an addition to to more indicators. That will be my main point, because as I mentioned in the beginning, this is pivot points is just a calculation that you do based on where price closes and opens and the high, the lows, and so on. As not open, just high, lows, and close. So it's just a calculation. You can see that it actually price bounces between these levels quite a lot. However, try to actually gather information that can be useful. For example, if you pay attention to, if you actually go back 6 months and you go around and you can see, okay, during these last 6 months, 180 days, let's just say 130 of those days, price actually touch at least the pivot point and at least touch one of the R and R1 or S1. So you can actually maybe start gathering some kind of information like that. How did price behave when price was trending or ranging? Let me see, like in the percentage of a certain days, how many times price actually does this or that. And that's how you can start using it as well, just to gather more information towards your, as you can use it in your strategy.
Okay, thank you.
You're welcome.
Can I jump
Any
in?
more questions?
Pedro?
Yeah, go ahead, Gavin. Yes.
Can you give me access?
Yeah, cool. Co-host.
Liking the conversation.
I gave you access. Do you want to share your screen or?
Yes, please. Yes.
Okay. Stop sharing. Go ahead.
Great.
No, we have a question, please.
Yes.
Yes, I would like to know what sort of alert could we put in place so that we can start being ready for triggering a new position? What would be the best alerts to put in place?
Price alerts. You could just set it on the screen itself on TradingView. So for example, if you want an alert for price to sort of breach through this level, you can add alert there. Mm-hmm. And that alert's been added right now. So as soon as price breaks through this level, I'll be notified as a notification. It will pop up on this screen, but also on my mobile phone. So I find TradingView alerts much better than anything else, really, because it does pop up on my phone. So that's one method. I know there is a couple of mobile apps on both Android and iOS. You can download that gives you price alerts as well on your phone. That's the ways that I'll go about it. But coming back to the original sort of conversation here, let's remove this. A couple of things that I noticed. One is be specific to the timeframes that you're trading, right? So hopping from one time frame to another time frame, going back and forth, it can lead to a lot of confusion. You're first starting on the 5 minute, then you look at the hour, then you come back to 30 minutes. So be focused on the time frame that you're trading and try and go about it from a top-down approach. Okay, so you can go look at the higher time frame just to sort of remind yourself of what the bigger picture looks like. But when you're doing your analysis, start on the higher time frame and work your way down to the lower time frame. So let's be a little bit more specific to the time frames that you're trading, but also your holding period of the trade as well. How long do you want to hold the trade for? If you're trading pivot points, you'll be trading on a much lower time frame, and they're shorter day term sort of trades, right? So they're open for maybe sort of 30 minutes through to the end of the day. So it is a day trade. Something else to mention is outline the process that you're going to apply when you're doing your analysis. Okay, so if I'm looking just to trade pivot points, and pivot points are great referencing points of support and resistance levels, make sure that you do your primary analysis first before you apply a secondary indicator such as pivot points. Okay, so primary analysis is, of course, support, resistance, trend lines, and so and so, right? Candlestick analysis and as such. So just to sort of highlight a couple of sort of key levels. So the first thing I'll probably sort of highlight is probably this sort of key level resistance here. I'd also highlight just focusing on NASDAQ because that's what you guys have been talking about anyway. This level here, and of course the low to the spike there. Yeah. In some cases, you may want to add zones. So you may want to add, highlight a specific zone. So I'm probably sort of highlight this area here. That's one zone. Yeah, so you can see price action piercing through rejection straight away. Didn't close in this region here, but it did close there, did close there. Went up to test the upper part of that sort of resistance zone, and then it pierced through just recently, right? Again, if there is a zone here, you'd want to create a zone in this region and in this region as well. This one is much larger zone anyway. Okay, so support resistance applied. When it comes to applying trend lines, I heard a trend line being applied from sort of your Fed outcome over here. So the Fed drive higher than the lower move over here. It's what I would probably say here is there is a lot of gap here, right? So the next touch, there's a lot of missing price action here. You can have a primary trend line and then have a secondary trend line as well, but usually the secondary trend line is within that approach, right? So you apply secondary trend line from here to there to sort of see this, then you see price action moving sideways in a range, and then there is another downtrend, down movement here, quite a sharp movement, and then again, mostly range, and then a pullback. This is your first pullback that we've seen here, right? So that's the way I'd go about it. But this trend line here is, I wouldn't put too much relevance on it because, I'm looking at 3 clean touches. And, this is, one cluster of price action. So I'd want to see lower lows, lower highs, and then the third touch before I look to take this as a trading opportunity using this trend line. Yep. So, but I will still apply it. I think it's a good, trend line, because we've got 2 strong touches so far, but let's see what price action continues to show us. But look to apply primary analysis, and sort of this, primary trend line and a secondary trend line, and look to read price action. So what we've seen is that's the high. We've got this primary move that we're seeing from a bigger picture view. Within that movement, we've seen this sharp downtrend movement, sideways price action, then a new test to a new low. And then we've now seen the first corrective move where we've broke through the prior resistance, and we've gone on to test this primary zone over here. Yeah. And then that's where you can start to sort of apply, overlay your pivot points. So I'll do that now. Search for pivot points. You can use the standard. Yep, so that applies the standard. At this point is where I probably would want to shift down to my lower time frame where I'm looking to take the trade. Okay, but something before I do that, let me just go into the settings of this. Okay, so style traditional, I'll probably go with a classic. Auto. So again, it can do, it can, depending on what time frame you're on, it will make this adjustments. But as I know that I'm only going to be using the daily referencing points, so I'll keep it as that. How far back do you want to go? How far back do you want to go? Well, you can go 15, 5, 10 periods is up to you. How far back do you want to go? So I'll stick with 5. The labels on the left, line width, fine. Okay, colors up to you, right? So that's the sort of setting that I'm looking at now. Then I'll probably sort of go down to the time frame that I am looking to trade, right? So then, the 5-minute time frame is probably a better view for me. So 30-minute and 5-minute time frame. And so this is an alert that's come up, by the way. Okay, so this is a great trading opportunity right now, right? Is the shorts, and that's why I wanted to hop on, because I do think there is more of a shorting opportunity. Because look at what we've seen price action wise. We've seen the first corrective move occurring. This is a first corrective move. On your 5-minute time frame is where you can apply more analysis. Okay, so this is where I apply a trend line such as this. We've had a bull uptrend, 2 touches. When we had the 3rd touch, it fell to sort of hold. It broke through. It's testing that prior low. That's the low we need to pierce through, right? That's the low we need to pierce through. That is in line with the PP level. Your PP level is your high low close divided by 3, so the average price from the prior session, Friday session. Okay, so throughout the sort of trading session, we've seen it tested sort of early in the morning, 4:20 a.m. Then around the open, UK open, we can say around 8:30, right? It's pulled back and it tested again. There's a sharp move. And why are these candlesticks quite erratic? Why are they quite large? Well, do note this is around the open. So look, around the 2:30 open, we saw a large burst of orders coming into the market. So I wouldn't look to take the trade at that point. But right now, you can pretty much see how we're testing a pivotal point. Are we bullish or are we bearish? If you're above the PP level, if you're above the pivot point level, then generally you're assuming that it's more of a bullish market. If you're below it, that means we're more in a bear market. At this moment, this is where we're sort of going to outline what's going to take place at this moment. If we do break through, then we're in bearish territory, and you can look to target the next key levels. Now, this support level that I highlighted is also in line with the previous day pivot level, but more of an R1 rather than support. Yep. And then you've got this S1. So I've got quite a few targets here. I've got a 12,100 target, then I've got a 12,010 target, and then we're looking at taking it all the way back down to these levels, right? So it gives me multiple targets to set. But what we need is a confirmed breakthrough, right? Confirmed breakthrough. I think, Matthew, this is maybe something that you wanted to sort of, figure out, which is, okay, now we're at this point, how do I look to execute the trade? So we're away from the setup. We know what the setup is. The setup is that, I'm looking to go short when we sort of through the pivot point. But when is that going to take place? That's now we're moving away from the setup. We're now focusing on trigger and execution. So what is your trigger point is what you need to outline. What is your trigger point? Your trigger point could be, for example, let me use something else. I'll use this. Just make sure it's straight there. So my trigger point is when price is below the pivot point and below the price, spike through low. That's my trigger point. That's where I'm looking to enter, is through this level here, right? That's your trigger. What's your execution? What it would be your execution at this point here now, right? The execution could be a time filter or a price filter or a combination of both of them, right? So a price filter will be the earliest way that you can execute a trade, right? That pretty much means that as soon as price, say, tests 12,180, I'm entering that trade, right? Or you could say as soon as price, pierces and just closes slightly below, it could be say 12,180 or 179, because you don't want to sort of, you might see a bounce of that round number. That's one option. A time filter is you're going to wait for the candle to close. That's something that I tend to use, is a candle to close, right? A candle to close. Once a candle closes below your trigger point, that is when you execute the trade. Now, the downside of that is, what if that candle closes somewhere down here? Well, then that's the negative of waiting for a time filter, is that you get in far too late, where there may no longer be a trade there because of the reward to risk ratio, right? And that's the sort of judgment that you need to make, or that's the trial and error that you should do as a trader, is work out what is better for you over a sample size of trades, a time filter or a price filter of executing the trade. Now, once you're in the trade, you need to, before you execute the trade, you need to assess where you want to place your stop loss and where you want to place your TP, right? Ideally, your TP should be at the next key level, but in some cases, you may say, I'm trading pivot points. I'm trading the break of this pivot point as sort of the key focus here. So I'm going to be targeting the next PP level, which is S1, right? So it's up to you how you want to set your target. Again, stop loss, we know I'm not going to go too heavily into stop loss. Ideally, you want to be above the swing high, maybe give it yourself a bit of buffer, and you need to maintain a good reward to risk ratio. Especially with the pivot point strategy, you should be looking for a minimum 2-to-1 reward to risk. Okay. So yeah, what else can I follow through with that? So we've gone through trigger, we've gone through execution, management. So you need to do sort of in-trade management of the trade as well. So make sure that you trail your stop loss as you go along. But yeah, this is a pivotal point at this moment. I'm not saying that we're going to break through right now. It could be the case where, we're bouncing off, we're seeing some buyers support this region here as they already have, and we could see the third test to this trend line over here, right? And I want to sort of, I'd probably see this as a trend line just going from this point to this point and then the next touch level, rather than the Fed focus from those highs, okay, for the higher time frame trend line. Yeah, but the key is we've got a lower high. We've just breached through the prior low, or testing that prior low. It's not quite there yet. And this could be that, what I said earlier in my sort of session from this morning, this is that dead cat bounce, right? So we're seeing a bit of bullish, a bullish tone coming in from Friday's session, profit taking, and then all of a sudden now we're seeing more of a bearish direction to continue the overall bear trend that we're in at this moment. So yeah, take it as you wish, guys, but I'm thinking that this is potentially at a great point now. Know your time frames, know the type of strategy that you want to trade, and work your way from the higher time frame to the lower time frame. Know the difference between primary analysis, secondary analysis, and then don't just focus on the setup. Also put emphasis on how do you trigger trade, how are you going to execute the trade, what's going to be your in-trade management, right? So yeah, any questions to that, guys? Any questions?
So a quick question on the time time confirmation. So let's say, for example, price comes down and breaks, what is it, 12,180, the dotted yellow line right there. Yeah, so it comes down, breaks that 12,180, and you see that the candle has not closed on the larger time frames. Can you go to a smaller time frame and wait until a candle closes?
No. So again, that's going to lead to more confusion in how you go about trading. So there's two time frames I selected there. The 30-minute was the higher time frame analysis that I did. Just give me a moment. Yep. So 30. This is the analysis I did on the higher time frame, looking at key levels, applying a trend line, just reading price action is what I was doing here, right? And then the 5-minute is my base time frame. This is what the time frame that I'm going to form my trade idea, and I'm going to execute the trade. Yeah. As you progress through the training program, you're going to cover multiple time frame analysis, and there are 2 to 3 timeframes that you could use. You could drop down to a lower time frame, but at this moment, I'm just sticking to the lowest time frame I want to trade is a 5-minute time frame, to be honest, not lower than that. So all I'm for the time filter, I'm waiting for a 5-minute candle close through this dashed line here. That's what I'm looking for, right? There are some traders I know that don't go on one candlestick close. They might look at 2 candles closing below this level for them to execute the trade. You know, so there's different ways of leading into confirming the trade entry, right? But do remember, the more confirmation you need for the trade entry, the later you're going to get into the trade. The later you will get into the trade, right? Let's put the pivots back on. Yes, at this moment we're rejecting it, right? You can see it's rejected. It may be pulled back to sort of another point of a hair, and then we'll see what happens later on today, whether it will break through this level. But am I looking to buy at this point? No. I mean, I don't know how you could be bullish with the way price action is at this moment. You know, the only time that I'll be looking to buy is when price is in this region, right? So when price is back above 12,500, 12.5, you know, 12,600. Once we're back above 12,600, we've gone through all these key level, you know, key resistance points, right? We've outlined here. Then this is a buyer's market from there on, right? But at this moment, yeah, you know, sellers are still in control, even though in the very short term, you're seeing a bit of bullish incentive coming through. It's about waiting now, patience. You've done your analysis, you've done your work. I think Seb mentioned earlier, what do I do now? How do I'll set an alert at this price level, add alert. There we go. I've got an alert at this price level. I'm not looking to come back. Maybe I might come back if price, for example, if price, you know, tested this, what Ari mentioned, this downtrend line, right? So if we have, you know, we've got one touch there with the second touch there, if price comes back to test this level, maybe that's a great way of shorting as well, because not only am I getting in at the higher price for a sell, right, but I can have a much greater, tighter stop loss with this trade. And it's just, in my opinion, it's a safer stop loss as well than taking a trade short here and you put a stop loss somewhere halfway in this region here. And then just as it could spike through, come back to hit your stop loss and then eventually move lower as well, right? So there's different ways that you could tackle that. You could sort of look to take a trade here. One is, of course, you know, looking at price. And a third option, all right, so let's go through the options, right? So we can see price coming up to sort of this point, testing that level, and then that's our way of taking a trade. So that's one option, right? So price comes back to test this, gives us 3 touches here. We look to sell here. We've got to, you know, we enter somewhere, once we break some of these lows, we enter somewhere here, have a clean stop loss somewhere in this region here, right? It's a tight stop loss because, you know, there's some sort of key zones here. But for the time frame you're trading, the 5-minute time frame, that's fine. Yeah. And then your first target could be just back down to sort of the PP level, right? That's one option there. Second option is, of course, we're waiting for the breach through this level. Where is price? Price is there now. So that's one option there, right? And that's where we're waiting for price. The candle close through this level, candle close through this level. You might say, no, I'm not waiting for a candle. I'm waiting for as soon as price gets to a level, I'm in, right? It's your choice. This is what you need to test. What works best for you, right? And then the third option, third viable option will be is price. I'll just do it like this. Pierces through, but you wait for the retest as a way of getting in, right? That's another option, right? If you want a bit more confirmation than just time and price filter, you want price to break through, possibly retest the zone, and then you take the sell thereafter when it continues to move lower in this case, right? So yeah, there are 3 ways that you could trade this right now. There are 3 ways you could trade this right now. Set up your price alerts, look for those opportunities, and let's see how it goes. Any questions, guys? Any questions?
Gavin, a pivot point, does it work in like sideways? Let's say today, the end of the day, the Nasdaq goes sideways all day long, no major moves.
Pivot points, did you say? Pivot points?
Yeah. Does it work in a sideways day or a market?
Yes. You know, I think pivot points are one of one of the most popular indicators used, and it's been around for many, many years. And I know some great day traders who trade pivot points, and they could trade rangy markets and trendy markets as well. You know, this is an indicator that was first established and, you know, originated on the on the trading floor itself. You know, in the Chicago Mercantile Exchange. You know, pit traders were using this as their sort of reference points of how bullish or bearish markets were based just on the ticker price. No charts, you know, were around when pivot points were first created. So yeah, I do believe, yeah, pivot points can be applied in, you know, in multiple settings, but I would go with this process that I did here, right? You know, primary analysis first and secondary analysis. I feel that when you start to then apply oscillators such as Bollinger Bands on top of pivot points, then I think that leads to less trading signals because there might not be a viable reward to risk ratio. So that it generally leads to multi-collinearity of indicators, which tends to lead to less signals, and generally you need more signals, you need more trading opportunity, is always the case that I've seen from traders. So yeah, that's where over-analysis leads to paralysis, shall we say. So it's not something that I would coincide with Bollinger Bands, in my opinion. But again, you know, you can prove me wrong, and many people do prove me wrong, right? So, you know, if you've got a specific indicator, specific assets, specific time frame, and you do apply Bollinger Bands and pivot points, and it works well, and you've got a good hit rate, you've done the back test, the forward test, and so on, so that's fine. But for me personally, I would not coincide the two. You know,
no, I tested actually both separate. I don't think they go together.
Yeah, I think independently they work well if you know what you're doing, but once you put it, it just doesn't coincide, in my opinion. Any other questions at this point, guys?
Why would you say that? Why is that? Why don't they coincide?
So the way I see it is that it leads to less trading signals in the day. And when you're applying a Bollinger Band system or a pivot point system, the more active you are, the better the more upside you have, in my opinion, right? It's like you need to continue to participate in, you know, taking, you know, to get it to be able to achieve the reward to risk ratio. Because generally what you will find is with Bollinger Bands and pivot points, because you're trading volatility, right? There will be a lower hit rate associated with it, which means that you won't often be, you know, you're not going to have an 80% hit rate on your trades. You're not going to be right 8 out of 10 times, right? You'll have a lower hit rate. It could be somewhere between 40 to 50% hit rate. But what makes a difference is reward to risk ratio. Now, if you're able to achieve a reward to risk ratio of 3 to 1, 4 to 1, 5 to 1, you know, that's what's going to sort of, you know, recover those losses and give you some profit, something to, you know, to bank at the end of the month, right? Now, as soon as you apply those two systems together, what tends to happen is it reduces your reward so much so that your reward to risk ratio would be, you know, generally a 1 to 1 or 1.5 to 1 on average. And therefore, with a hit rate of 40%, you're not going to be profitable, right? But on top of that, you're not taking enough trades as well. So I'm talking about from statistics and looking at larger sample size, really, is why it doesn't work, in my opinion. Yeah.
Okay, thank you. And that makes sense, yeah, because most of my trades are, that I've noticed, 1.5 to 1 or 2 to 1. I rarely get 3 to 1 or 4 to 1. So yeah, that makes sense. Thank you.
With pivot points, you want 3 to 1s and 4 to 1s as you know, it should be part of your trade plan almost, that you won't even take a trade or consider a trade if it's giving you less than 2 to 1 or 2.5 to 1. That's how important the reward to risk ratio is of a pivot point system, because it's not always going to work. Something I can't remember who asked this earlier. Someone else asked earlier. I can't remember, but they asked what are some of the drawbacks of pivot points, right? Something that I would probably suggest that you do, and it should be a must if you're applying pivot points, is do not a back test, but review historically how often support and resistance levels have been tested and, you know, and worked well. Just looking at this, right? Just looking at sort of, you know, prior sessions, You know, it didn't hold this anyways, right? Didn't really hold this level anyways, nor did it do for this level. It didn't go into test at S1 there, right? It bounced earlier. Didn't retest this level either. No, didn't get up to that point either. Right? So I'm just looking at how often we've seen, this is probably sort of one area here, right? That's a great one there. Because that was from the Fed meeting, right? And that's why I think I mentioned in the Fed meeting, prior to the Fed meeting, that you need to be aware of pivot points, as those are key levels where you can fade impulsive moves, explosive moves, right? So looking at sort of this substantial sell-off occurring, I'm not sure if that's even Fed actually, that might be something else, but we've seen a strong sell-off taking place, and that went on to sort of test the S1 level. And from there, rejected. Look at the type of candlestick formed in this region, and then you'll be looking to execute the trade in this region here, right? Look to sort of, you know, buy on once price closes above that doji candle. That sort of, you know, yeah.
Quick question. So if you look at those 3 candles right there, that bounced off of S1, right? So that doji, and then it looks to me like, so like those 3 candles, right? The green bull candle, did it come up? Did it close 50% of the red candle? If you look at the 3.
So you're suggesting sort of, are you just talking about one single candle, or the move itself?
I'm looking at the 3 candles. Yeah, that bear candle, the doji, and the smaller green candle. I'm looking at the collection of those 3 candles.
Yeah, so 3 candlestick formations, and what you want to see is, hang on, no, we need, what do we do in the fib then, isn't it, really? So if you're looking at just the body of this candle, right, so from the high to the low, I'm including the wicks, not just the body, that would be the 50%. So it's the 3rd green candle that, you know, crossed above that 50% of that bearish candle.
Okay.
Yeah. Now that's a great point that you mentioned. I know some traders that look at this, right? They will only execute a trade. If I just leave that there, they'll only execute a trade once they have this as a confirmation. Once the sort of, you know, they've seen that price action has crossed above 50% of the prior bearish candle in this case, you know, range. Right? And that's a good rule to have, because this is another way of confirming your entry into a trade and not getting in eager sort of at these lows here, and all of a sudden that just, you know, it just ends up continuing lower against you, right? So yeah, that's another way of confirming an entry point, right? Some individuals look, it depends how early you want to get in, right? You know, some individuals might just get in as soon as S1 is tested here. As soon as the S1 is tested here, they'll get in here, they'll put a little bit of a wider stop loss, and then they'll just, you know, they'll just hope that it goes in their favor. There's not a lot of analysis if you're just jumping in based on just a pivot point and price testing that pivot point and hoping for the reversal, right? You're preempting a move at that point. So, you know, it's more of a gamble than a trade, in my opinion. What you want is confirmation, right? First you want is rejection at this level. And that's what you have with this type of candlestick formation, right? You have rejection at, of this, you know, of the S1 level. You're seeing a lot of buyers are coming in at this point of the hair and supporting these price levels. Then you want a follow through. You want a decisive candlestick that goes on to breaks the prior candle, this candle high, right? That's one way of entering the trade, which will be as soon as price, as a price filter, price crosses above that prior candle high. That's your way of entry. That's also a very early entry, but at least you're getting it with directional confirmation. Yeah. The second option would be is to wait for this candle to close. That gets you in there, right? Then it could be similar to what you mentioned. Now I want to enter as soon as 50% of the range is covered on that bearish candle. Yeah, and that could be somewhere in this region here. The more later you leave it, the more confirmation you get in, the much wider, much larger your stop loss is going to be, and you've got to achieve a good target as well, right? If you're looking at a pivot point, you want to achieve at least a 2 to 1, right? So you need to work out how much confirmation you need to get into the trade. How much confirmation are you looking for to get into the trade?
So if let's say, for example, price did what it did here, right? So the third green candle closed at 50%. What are the chances? How often does it happen to where, okay, yeah, that third green candle closed to 50%, but then price just was like, no, and it just tanked right after that third candle? How often does that happen?
But that's the thing, Matthew. It's very difficult to give you one statistic just outlines that, right? It's all independent on the asset you're trading, the time frame you're trading, the strategy that you apply, and the sample size you apply based on the current market conditions you're trading. That's what, as a trader, you need to evolve, and you need to be doing the back test, the forward test, reviewing your sample size on an ongoing basis. We tend to review trades every 20 trades. Every 20 trades, I want to see your stats. And that's where we can look to outline information such as that. Now, hang on, most of your trades have been entry based on this, and how many of them have been profitable, how many of them have been losses? Right?
Okay.
So
Okay.
this is something that you need to be doing on an ongoing basis, Matthew.
Okay, that makes sense.
Right? Because there are 30,000 assets you could trade, and look how many timeframes you could be trading, right? And the types of strategies that you're applying, and then you have the geopolitical factors, the Fed, macroeconomic standpoint, and all these other sort of catalysts that could have an impact, right? So I can't give you one specific number because then I'm just making that up. I would rather be factual, where you outline your strategy, you do a 20 trade sample size, we can determine that straight away.
Okay.
Yeah.
Thank you.
Yeah. But be rules-based, exactly what I spoke about. Be rules-based. Know what's your setup, what's the reason for your setup. Know, how you're going to determine what type of trigger you're going to apply, right? Outline what's your execution reason, right? Time filter, price filter. You mentioned a 50% move above the prior bearish candle, or in this case, right? So yeah, you need to sort of have these rules, execute these rules, and then we can sort of quickly outline how well they work in the current market conditions. Yeah. Anyone else? Anyone else have a follow-up question here?
Thank you for those answers.
Yeah, no worries, no problem.
Yes, I would like to test this method, and we're using a very small lots, allowing to not to take risks at the beginning. The minimum lot we can take in the trading tool is 0.1 BTC. Is that correct? Because when I try to have a lower lot size, then it's not accepted. Is there a way to trade smaller just at the beginning, just to test the method?
No. So what's the issue? I don't quite get the issue. So the minimum to trade BTC, is that what you're asking?
Yeah. The volume is 0.01 minimum. If I trade lower, then it doesn't work. However, if I trade 0.01, the stop loss is very close to my entry, and most of the time my win rate is impacted because there are small reversals that I touched. Whenever initially I wanted to go down, for example, the price will go down, but in the meantime it went up a little bit, and then I touched my stop loss straight away. It's just too close, I think, for me to test properly. So I would like to reduce the volume.
The lowest volume you can have across all assets, across all assets is 0.01. 0.01.
Okay.
Smallest lot size that you can execute a trade. That's a micro lot position that you're placing in. The issue is that if you're trading BTC USD, because the value of that asset is significantly greater than, for example, the value of what we're seeing here, right? Even though we've had a 50% more than 50% correction, but you're still trading a $30,000 asset, and the contract size is quite large for it. So that's why, I would rather you test it on a maybe different asset.
Okay. Because today I've traded a lot, too many times, I think. And honestly, I was very much impacted by that. I was right in my decision on, for example, on the 1 hour time frame, But then by using the 0.01, I was so close to the beginning that I was immediately touching. At some point, I was impacted, and then it's frustrating because I could see the trend, but well, because of this size of lot, I was starting to. Yeah. I was losing too quickly, so that's why the stop loss was closed. Huh? And yeah.
If you're testing something new, right, make sure that you're trading on a demo account. I had spoken to someone just earlier today.
Yeah.
He was testing something new, but he ended up doing it on his live account and he took some losses. Okay, so make sure that you're trading on your demo account if you're testing something new. And secondly, just be mindful of the assets that you're trading and the contract size as well, because if you're trading stocks, the contract size could be much greater with a trade in BTC than it would be, say, in Ethereum, right? So that's where you might.
So I should try Ethereum then. I will do that.
Yes, I was suggest trying a different asset.
Okay, thanks.
No worries, no worries. Anyone else have any final questions before we end the session? I'm not sure what time did we start. We started at 3, right, Pedro?
Yes, 3. It's been a 2 hours webinar.
Yeah, getting over 2 hours.
One last question, sorry. So if we're just continuing to look at the NAS here, you're looking at 5 minute. If you look at the 30-minute, is there kind of, how do you create trend lines on different time frames? You just always look at the wicks, correct? You always base it off of the wicks.
Yes.
Is that correct? Okay.
Yes.
Okay.
If you're applying a downtrend, it's at you're placing them based on the highs, right? And the way to go about it is you apply it from one. The actual technical way, as I've been sort of taught with the STA, is you apply it from one point to the next high, right? From one high to the next high, and then you extend the line. That's the correct way of doing it, right? But I just it how I do it. I'm used to doing it the way I like doing it. But yeah, so you just take 1 point from one point to the next point, and then what you do is ideally style. I think extend right. That's the correct way of doing it. And then you can even do this right on TradingView. If you hold down Control, it will take you to sort of the key points as well. So you just go there, and then you take the next point and you take it to the next low there, and that's the correct way of applying the trend line.
Ah, wow. Okay. Okay.
Cool. You could do it like that. There, that's that trend line, or wherever you want to apply it. Right. So let's say you apply it there. Right. So you're an uptrend there, test there, low high there. Yeah. That's the correct way of applying the trend line, ensuring that you're maintaining some level of objectivity. Because I've seen some funky trend lines. I'm telling you. Now, some guys showed me some trend lines, very subjective trend lines. Like, how on earth did you apply that trend line? So yeah, try and maintain some objectivity when you apply the trend line, always at the lows or the highs of price action.
Okay. Okay. Thank you.
No worries. No worries. Okay. I can hear my phone. My phone is just into the house, so I've got to head off, guys. Enjoy your evening, guys. Enjoy your evening. I'm liking these sessions, Pedro, so good job there. Keep them coming. And I'll see you guys soon. I'll speak to you guys soon. I'll hand it back over to Pedro.
Thank you.
Yeah. Thank you, Gavin.
That's cool.
Thank you, Pedro.
Yeah.
I will see you.
Thank you, Pedro.
Okay, guys.
Thank you, Pedro.
All right.
Thank you, Pedro.
Thank you. Good
Thank you very much,
Bye-bye.
guys. Thank you for participating on the webinar.
Cheers.
Bye bye.